Investing in an exchange-traded fund, ETF, can be a great way to diversify your portfolio and gain exposure to a variety of asset classes, sectors, and markets. Here is a step-by-step guide on how to research an ETF investment. Determine your investment objective. Before investing in an ETF, it's essential to determine your investment objectives. Are you investing for long-term growth, income, or both? Are you looking to invest in a specific sector or market? Answering these questions will help you narrow down your options. Determining your investment objective is the first step in researching an ETF investment. Your investment objective should reflect your financial goals, risk tolerance, and investment time horizon. Here are some questions to consider when determining your investment objective. What is your investment goal? Are you investing for long-term growth, income, or both? What is your risk tolerance? Are you comfortable with higher risk investments that have the potential for higher returns, or do you prefer lower risk investments with more stable returns? What is your investment time horizon? Are you investing for the short term, less than 3 years, medium term, 3 to 10 years, or long term, more than 10 years? What is your current financial situation? Do you have any outstanding debts or financial obligations that may impact your ability to invest? What is your investment experience? Have you invested in ETFs or other investment vehicles before, or are you new to investing? By answering these questions, you can determine your investment objective and narrow down your options when researching ETF investments. Research ETFs that match your investment objectives. Once you have a clear understanding of your investment objectives, you can begin researching ETFs that match your criteria. You can use various screening tools, such as Morningstar or Yahoo Finance, to search for ETFs that meet your investment objectives. After determining your investment objectives, the next step is to research ETFs that match your criteria. Here are some steps to follow when researching ETFs. Use screening tools. There are various screening tools available, such as Morningstar or Yahoo Finance, that allow you to search for ETFs that match your investment objectives. These tools allow you to filter ETFs based on criteria such as asset class, sector, expense ratio, and performance. Review the ETF's investment strategy. Once you have identified potential ETFs, review the fund's investment strategy to ensure it aligns with your investment objectives. For example, if you are investing for long-term growth, you may want to look for ETFs that invest in companies with a history of strong earnings growth. Check the ETF's holdings. Review the ETF's holdings to see if it includes companies or assets that you would not like to invest in. For example, if you are interested in socially responsible investing, you may want to look for ETFs that exclude companies involved in controversial industries such as tobacco or firearms. Look at the ETF's asset class and sector exposure. Ensure the ETF invests in the sectors or markets you are interested in and aligns with your investment objectives. For example, if you want exposure to emerging markets, you may want to look for ETFs that invest in emerging market equities or bonds. Check the ETF's expense ratio. ETFs charge management fees and other expenses that can impact your investment returns. Ensure you review the ETF's fees, such as the expense ratio, trading fees, and other transaction costs. Lower expense ratios can have a significant impact on your investment returns over time. Look for ETFs with a strong track record. Evaluate the ETF's historical performance to determine if it has met its investment objectives in the past. Consider the ETF's performance during different market conditions and how it has performed against its benchmark index. By following these steps, you can identify ETFs that match your investment objectives and narrow down your options when researching ETF investments. Review the ETF's investment strategy and holdings. Once you have identified potential ETFs, review the fund's investment strategy and holdings. Ensure the ETF invests in the sectors or markets you are interested in and aligns with your investment objectives. Also, review the ETF's holdings to see if it includes companies or assets that you would not like to invest in. When researching ETFs, it's important to review the fund's investment strategy and holdings. Here are some steps to follow when reviewing an ETF's investment strategy and holdings. Read the ETF's prospectus. The prospectus provides detailed information about the ETF's investment strategy, holdings, and fees. It also outlines the risks associated with investing in the fund. Understand the ETF's investment strategy. The investment strategy explains how the ETF aims to achieve its investment objectives. For example, some ETFs may use a passive investment strategy that seeks to track a benchmark index, while others may use an active strategy that involves picking individual securities to outperform the market. Review the ETF's holdings. The ETF's holdings are the securities it invests in. Review the ETF's holdings to see if it includes companies or assets that you would not like to invest in. Also, consider whether the holdings align with your investment objectives and risk tolerance. Consider the ETF sector and geographic exposure. The ETF sector and geographic exposure can impact its performance. For example, an ETF that invests heavily in a single sector or geographic region may be more volatile than one with a more diversified portfolio. Evaluate the ETF's asset allocation. The ETF's asset allocation refers to the proportion of its portfolio invested in different asset classes, such as stocks, bonds, or commodities. Ensure the ETF's asset allocation aligns with your investment objectives and risk tolerance. Consider the ETF's diversification. Diversification is the practice of investing in a variety of securities to reduce risk. Evaluate the ETF's diversification to determine if it is appropriately diversified for your investment objectives. Look for any concentration risks. Concentration risks arise when an ETF invests heavily in a single security or a small number of securities. Evaluate the ETF's holdings to determine if it has any concentration risks that could impact its performance. By following these steps, you can evaluate an ETF's investment strategy and holdings and determine if it aligns with your investment objectives and risk tolerance. Check the ETF's fees. ETFs charge management fees and other expenses that can impact your investment returns. Ensure you review the ETF's fees, such as the expense ratio, trading fees, and other transaction costs. When researching ETFs, it's important to check the fees associated with the fund. Here are some steps to follow when checking an ETF's fees. Look for the expense ratio. The expense ratio is the annual fee charged by the ETF for managing the fund. It includes management fees, administrative expenses, and other costs. You can usually find the expense ratio in the ETF's prospectus or on the fund's website. Consider other fees. In addition to the expense ratio, there may be other fees associated with the ETF, such as trading fees, commission fees, and bid-ask spreads. These fees can impact your investment returns, so it's important to be aware of them. Compare fees with similar ETFs. Compare the fees of the ETF you are interested in with similar ETFs to ensure you are getting a competitive price. You can use online tools, such as Morningstar or Yahoo Finance, to compare the fees of different ETFs. Look for low-cost ETFs. Low-cost ETFs can have a significant impact on your investment returns over time. Consider investing in ETFs with lower expense ratios and other fees to maximize your returns. Consider the impact of fees on your investment returns. Fees can significantly impact your investment returns over time. Use an online fee calculator to determine the impact of fees on your investment returns over different time horizons. By following these steps, you can check an ETF's fees and determine if it is a cost-effective investment option for your portfolio. Evaluate the ETF's historical performance. Review the ETF's historical performance to determine if it has met its investment objectives in the past. Consider the ETF's performance during different market conditions and how it has performed against its benchmark index. Consider the ETF's tracking error. ETFs aim to track a benchmark index's performance, but their returns may differ due to various factors, such as fees and expenses. Evaluate the ETF's tracking error, which measures how closely the ETF tracks its benchmark index's returns. Review the ETF's liquidity. ETFs trade on stock exchanges, and their liquidity depends on the trading volume and the assets held by the fund. Check the ETF's average daily trading volume and the liquidity of its underlying assets to ensure you can easily buy and sell shares when you want to. Seek professional advice. Investing in ETFs can be complex, and seeking professional advice can help you make informed investment decisions. Consult a financial advisor or investment professional to determine if an ETF is suitable for your investment objectives and risk tolerance. By following these steps, you can research ETFs and make informed investment decisions that align with your investment objectives and risk tolerance. That is it for today's video. Please comment down below with your insights and ideas. To learn more about business, life, and technology, subscribe to this channel, and we'll see you on our next video.